Insurance. We all need it, but is it clear to us why exactly? Essentially, insurance is protection. But what does it protect us against? Every family has a breadwinner, at least one or two if both parents earn income. Now, there are 4 threats to a breadwinner's capacity to earn income: premature death, disability, getting diagnosed with a critical illness, and old age, retirement. Insurance is a way to protect the family's income and way of life from these threats. This is what's called family protection. There are multiple types of life insurance products. Let's zero in on 2: traditional life insurance and variable unit-linked life insurance, also called investment-linked life insurance. Let's break it down further. If you have what's called traditional life insurance, you are provided a protection benefit plus savings equivalent to a cash value. Cash value allows you to loan from the savings to spend for a need like a source of cash for certain purchases, emergency fund, supplement for retirement funds. This cash value is also called a living benefit because you enjoy it while you're still living. Do note, however, that interest charges still apply to policy loans, and if you're unable to pay it back, this will be deducted to your death benefit, so we must be responsible when enjoying the living benefit. There are 2 types of traditional life insurance: permanent and temporary, also known as whole life and term life. Whole life insurance covers the insured person for their entire life. He or she stands to receive the death benefit or payout upon passing away. There are 3 types you can choose from, depending on the payment method. There's regular pay, where you have to pay for the whole life coverage for your, well, whole life too. Then we have the limited pay, where you'll pay for the whole life coverage for a limited time only, say 5, 7, 10, or 15 years. Lastly, we have the single pay, where you'll pay for the whole life coverage once. Whole life also gives the insured the chance to accrue cash value in the form of savings or earnings. On the other hand, term life insurance only guarantees the death benefit for a limited period of time, say within 1, 5, 10, or 15 years only. At the same time, you're only required to pay for the plan during the years you are covered too. So for term, if the insured survives beyond the period specified in the plan, then the protection benefit expires. However, the insured does have the option to renew the term life insurance for another term if he or she wants to continue it. Now, what about investment-linked life insurance? As the name suggests, this type of life insurance has an investment component on top of the protection provided. It also requires higher premiums than traditional products because a portion of it is set aside for funds invested in stocks, bonds, and/or other types of financial assets managed by expert fund managers. You should select a fund that matches your financial objectives and risk appetite. This living benefit or cash benefit is known as fund value. Because of this feature, investment-linked life insurance offers potential faster growth of your money versus the traditional products and their cash value. If you have the so-called big-ticket goals, like buying a house, going on a dream vacation in Europe, buying your dream car, or even setting up your own business, all of these require substantial capital. Usually, to gain that much capital, you would need to do several things: save more money, earn more income, and make investments to provide you with additional funds. To potentially meet those big-ticket goals, one of the tools you can use is life insurance. Usually, we think of insurance as providing a cash payout to beneficiaries after the insured person has died. We often think of it as a protection vehicle alone. However, there is another type of life insurance that not only protects you, but also gives you the opportunity to accumulate funds that can help you meet your big-ticket goals while you are still living. This is what we call investment-linked life insurance. Also known as VUL or variable unit-linked life insurance, this type of life insurance is one way to help you earn extra funds to potentially help you achieve your medium to long-term savings goals. The amount invested, plus the earnings or losses from investments made, comprise the fund value of your policy. This fund value is what makes your policy investment-linked. With proper management and barring unfortunate downturns and extreme volatility, this fund value can grow until it reaches an amount that is appropriate as an added financial source for your savings goals. Ideally, People who acquire investment-linked insurance would not withdraw from its fund value just for any other need. Rather, they will allow the fund value to grow until they are financially ready to use it for their big-ticket goal. But take note, when you withdraw from your fund value during the early years of your life insurance plan, it usually entails charges apart from reducing your fund value. So it's best to be always cautious when withdrawing to give your potential earnings time to grow and ensure that your policy coverage remains active. Bear in mind, though, that your premium payments allocated to your policy's investment component are invested and managed by professional fund managers. This increases the chances of your investment funds to grow in value. It also spares you the effort and stress of making investments yourself. This is why investment-linked life insurance remains a popular and practical choice. Many people see the bigger returns as worth the risk. Still, it is important for you to do your own research and consult insurance agents to see if this fits your needs, so you can be better prepared for a financially secure future.
The Philippines is one of the fastest growing economies in Asia and in the world, with various industries fueling the nation's growth. Ride the growth of the local economy by investing in the PruInvest PH Equity Index Tracker Fund. The fund allows you to maximize economic success by mirroring the investment returns and performance of the Philippine Stock Exchange Index. It invests in the top Philippine companies listed in the stock exchange. Invest now in the PruInvest PH Equity Index Tracker Fund and enjoy the benefits of diversification, exposure to a broad portfolio of stocks, liquidity, a holding period of 30 business days at most, affordable investment, starting at 10,000 pesos. At PruLife UK Investments, we do investments to help you reach your financial goals.